Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Thursday, January the 5th, 2016. It is the third trading day of 2017. Did I say 2016? 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, then we drill down and look at trade levels, our targets, and our hypotheses. We create 4 main hypotheses each day in order to have a plan in place for whatever the market throws at us. Then once the market opens, we determine how the market is reacting and which plan fits best, and then execute on that plan. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, sorry. Still very tired. Let's take a look at the news. We've got a big news day today. We had ADP, non-farm employment change, came out worse than expected. As expected, 171 came out at 153. Unemployment claims did beat, though. Expected 262, came out at 235. 9:45 Eastern, we have final services PMI. But the next big one will be 10 o'clock Eastern. ISM non-manufacturing PMI. Then we've got natural gas storage at 10:30, and then crude oil inventories at 11. So we got a fair amount of news this morning. Overnight, we've backed off, went down and hit a low overnight of 58. I think it was 58.75. Yeah. 58.75. So let's take a quick look at where we are within the trends and the different time frame very quickly. I want to keep this short today. Going over to the monthly, you can see that, let me get rid of these drawings here. You can see that we're still inside of the prior day, or prior month, with the high at 22.73. It looked like we were getting ready yesterday to break out. We still have a zipper measured move, believe it or not. We did not break the 57.50, which was the start of the impulse wave, although we did come back and test it. We're starting to work our way up. So, you know, we're still in this upward trend, but we do have, you know, a technical gap. And that doesn't get closed till we get back down into the 2100 area. Going to the weekly, you can see that we have an inside week going so far, inside of the prior week with the low at 28 and the high at 69.50. Haven't closed the technical gap, but we could close this going sideways, and it is the first week of the year. But the overall trend is still in place. Okay, going to the daily, you can see that you know, we going into the end of the year, we were trying to challenge the trend, and then we took it back, and right now we're holding above the 9 and the 20. We don't have any separation, but we do have slope to the upside. Going to the 4-hour, we did come down and close that technical gap. We tried to break below the 9, but you know, we've popped back up again, and we do have slope and separation. So the trend is still up on the 4-hour. On the 1 hour, a little bit different story. This is where we kind of rolled over. Now we're coming up and testing the 9 from below. If we can't get back above the 62 area, then we could get a start of a downward trend. And you can see as we go to the 30-minute, that accelerates. We've got slope and separation. We failed off of the 20, although we're trying to get above the 9 right now. So seeing a little bit of weakness, but not really strong. And then we go to the shortest time frame, where as we came down, we had the FUBAR Mr. Sneaky, and then they closed the gap and got continuation, and now we're above the 9 and the 20. There's a naked cross here at 60.75, just make a note on that. If we don't hold the 61, we're likely to come down, take that out, and test the lower or the 20 SMA. Looking at the large picture structure, you can see that we're back inside of balance. So now I have to make some adjustments on my my microcomposite because we fell out of balance, came down here, accepted value in around the 44 area, and then we got the doji day, and then we're getting continuation yesterday, but we failed to break out of the value area high. So we're back in value, but we rejected almost to the tick. Was it to the tick? 67.75, and the high was 67.25, so almost. So in this case, what I got to do is I've got to bring I got to widen out my microcomposite. So first of all, we went down here, and I got to include this day. So I got to bring in the this day right here, and then I've got to extend this over so that it incorporates. And what you can see is that the microcomposite shifted from the 57 area now back up into that 65. It was 66.50 before, now it's 65, and we've got value above us right now, but we're inside of the value area with the value area high at 68. What was our overnight? Where did that 68 come into? I had a 68. I know I've got the 69.50. What was the open of this day, wasn't it? No, that was 67. Anyway, we're just back in balance again, and this area still has a lot of undetermined fair value. I should put a CHVN right here at the 61.75, 61.50, and we're just chopping inside of here. Right now, I'd like to say 59.25. You could use it, but really you can't. You got to use the overnight low, which is at 58.75, and use that for a test down to 55 and take out of yesterday's low. Yesterday's low was 56. Key line in the sand right now is going to shift up to 49.50 from the 38.25. If we fall out of balance again, I'm targeting that 44 and then 38. You know, we could just chop around in here. Just keep in mind, watch that 57.50. The 57.50 is where we started the impulse wave. Let's take a look at yesterday's trading. Yesterday's trading, you know, we broke out of range, came back, you know, tested down to the 57.50. This was where the impulse wave started, then moved up, created the zipper, pushed up into the 64, and then we've just you know, been creating balance in around that 64, just below the microcomposite at 65, and we have a value area high of 66 and a value area low of 60. Double distribution yesterday, and we had a LVN here at 62.25. We're currently trying to get back above that. Failed to get back above that. I'd be looking for a move back down into where the VPOC was for most of the day. Most of the day, the VPOC was at 61 yesterday, and they stole it into the close and closed up here. So taking a look at the overnight. Overnight inventory is basically net short. You know, we opened, failed to get out of the value area. We failed to get out of 66, the value area high, and then rotated down, tested the LVN, tried to rally off of it, came up into the VPOC, and then they sold it off, and coming down into the HVN, chopped around in the HVN, then tried to rotate back up again, failed again, and then we just sort of chopped around that LVN, filling it in as, you know, price rejection turns into price acceptance as they fight it, and then sold off just before the news, then put in the foo bar Mr. Sneaky right here, and then we got the news that accelerated it up and coming back up into shifting a VPOC at 62.75. So taking our overnight low is down at 58.75. Overnight high, 66, which is right on our value area high. Our VPOC is not likely to shift, might shift slightly back up again, depending if we trade there, but 62.75 right now. And then we got a little bit of an LVN here at 60, but the value area is right here. So I'm going to use the value area at 61. Obviously going to be using the value area at 66. And right now our daily ATR is running at 1704. So 58.75 plus 1704 gives us an upside daily ATR that takes us to new all-time highs at 75.75. And then off of the overnight high of 66, takes us down to 48.75. Where's my daily downside? Did I erase it? No, there it is. 48.75. Oh, deleted the wrong line. All right, so then that's 48.75. And that basically is all the information. One thing I do want to point out, you can see that this is a pretty boxy looking profile. You do get a little bit of kurtosis right here around the 62.75, but for the most part, it was pretty boxy overall. So, still trying to determine, where value is, and with all the news, that could be revalued very quickly. So finishing up with the levels, obviously 56 will be a trade level. I'm not going to be using the 67.50. I'm going to be using the 68 and a quarter. And above that, I'm targeting the 69.50, and I'm looking for, if we get above 68.50, I'm looking for this double top here. This is a double top at 69.50, a weekly double top, and then a push through into, and as long as we hold the 57, let's take a look at that measured move. So here's the measured move that we were watching yesterday. Oh, I took it off. So let's remeasure it then. So this starts down at 57.50. I hate when that happens. Label gets in front of my drawing tool. I can't see where to place it. So 57.50 up to top of the zipper. And that gives us a measured move. I thought it was 71.50. I might not have measured this properly. But anyway, in around the 70, 71, and then the extended target is 73. I've got 71 and a quarter and 74.50 as my measured moves written down in my journal. So I'm going to use those 71 and a quarter and then 74 50. Those are two measured moves, and those are valid until we get below the 57.50. So I'll be watching if we get below the overnight low, whether or not we take that out, and then that'll invalidate that measured move. So let's talk about hypos. We're clearly back in balance. We do have a lot of news today, so I'm expecting a fairly decent range today. But we're going to open up, we still got a half hour. We're likely going to open up inside of range and inside of value. I'm expecting large rotations on the open, especially we've got news 15 minutes after the open. I'm looking for a open test drive in here, or an open auction in range, testing both sides, looking for them to come down, challenge the 60, maybe dip down into the 59.50 or 58.75, but I'm expecting the 56 to hold, then rotate up into the 64, taking out the naked close and the naked VPOC, chop around here, and then start pushing higher, okay, up into taking out that double top and move to try to take out the all-time high at 73. Now, that has got a caveat, being that if the news is not good, then hypo 2 will kick in, and I'm looking for an open auction in range, a failure to get above the 68.50, rotate back down, chop at the value area low down in the 61 area, and then fail, take out the overnight low, come down, test the 56, and then push through down to the 52.50 and chop down here and close somewhere down in the 44.50 range. So that's hypo 2. Hypo 3 is a open auction in range, failure to take out the overnight high, push through, take out the overnight low, come down here, chop around here, push through to 52, and then continue down and come and challenge the year open down at the 22.40.75 with maybe a late day probe down into the 36.34 and bring us back down here out of balance, okay, and challenge down here. And then hypo 4 is an open auction, failure to take out the overnight low, push up, chop between the 66 and 68, take out the 69, go up and take out the 73, put in a new all-time high, chop around in the 70s, and then push up into the 78, 75 to 85.50 area. So those are my four main hypotheses. I just want to take a quick look at gold. Gold, we were talking about the move and where our next resistance was and what the next, we had broken out of this balance down here. Actually, this shouldn't be here. Just got to redraw this for a second here. These days right here. This should come up here. Okay, so we were talking about if we broke out of this balance down here, we were looking for a move up here, and then we said if they accepted the 57, the next big target was this balance area here. We had longer term value here. We had the microcomposite in the last area they tried to hold, and we said that we'd likely come up here and chop between the 74 and 76 or 78 area. There was a naked VPOC at the 78 something, and we went and hit it almost to the tick last night, and then fell off, and then we pushed back up and we put in a new high overnight at 79.90. And now we're chopping around this area. I expect it to be choppy, but depending on news, we could remain in the price discovery, except that we have moved $42.80, on this particular rotation up, and that's getting a little bit big. There are bigger rotations. There's a couple 50s, but on the average, the the average extension or a rotation in this time frame is around 38, so we're just above it. So I'll be watching the 79, 80 area, but I'm expecting to probably see some chop today, and we could even fall back. And if we can't hold above the 64, I'm expecting to come all the way back down into the 57, and then probably bounce from here again. So gold has made a very, very strong move, but we're right back where we were anticipating the next big location would be. So expect them to probably balance out here for the next 2 days before they make the next leg up or down. Could be even a longer rotation here because we made a pretty substantial move. Right now we're $6.70 into a rotation right now. The upper Keltner still gives us room to go up and test that high. We're trying to break out a value right here at 77.40. If we can't, look for them to rotate back down into the 74 again. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.